Wealth Within, they gave me that feeling of trust.
What you learned in the course was just mind-blowing.
Amazing. It was phenomenal.
It opens your mind up and makes you realise you don't know what you don't know.
I've got the tools now, 100% worth it.
Definitely get educated.
Hello and welcome to Wealth Within's weekly hot stock tips. I'm Philip Tortevsky, Senior Analyst at Wealth Within, and we're Australia's most trusted stock market educators. Every Tuesday night you can see me on the Australian Stock Market Show live on YouTube alongside two amazing professional traders, Janine Cox and Dale Gillum. In the show we answer important questions around the stock market, cover lots of great stocks and help you become a better trader. Today, as always, we'll unveil what's hot and what's not for you, our viewers. But before we dive into this week's stocks, I am joined today by Wealth Within analyst Pedro Banales. How are you, mate?
Very good, and you?
Yeah, I'm very well. Good to have you on. Normally it's Dale and Phil, and
yeah, that's right.
It's a younger combination.
Yeah, that's it. Yeah, let's put a bit of spice into it today.
Yeah. Now, I mean, you're a Wealth Within analyst. For those that don't know, you've also been on our Tuesday live show. Yep. You're also a trader.
That's right.
You love to trade certain markets.
Beautiful, yeah.
And you're going to bring some fantastic information today. So let's get straight into it. On your screen right now is the watch list of the top 200 ASX stocks. So on your screen, obviously, we do have an interesting spread here this week, Pedro. We've obviously got Webjet. Now, Webjet's a stock that fell out of bed, if you can see, and starting to make a bit of a recovery. Mm-hmm. We've got a bit of the healthcare coming in, which had a fantastic week, the overriding healthcare sector. But I'm starting to see the bottom end getting picked up. And what I mean by that, obviously Domino's Pizza, that's been falling for such a while. So how much can you play into, an 8% move through there? Mm. Some real estate stocks coming through, Lend-Lease. So tech and real estate are kind of dominating the top 20 at the moment. It's nice to see some miners come through as well. Stanmore, obviously, that one looks interesting. BlueScope Steel as well, making its way in the top of the list. Are you seeing anything in particular there?
Yeah, so it's interesting that we are seeing those healthcare stocks coming into play now. We've got Sigma Healthcare here. Pro Medicus has been on a tear.
Yeah, forever.
Forever. Good luck trying to pick that one up at the moment, but it does keep defying expectations. We got Telix Pharmaceuticals, so a lot of that healthcare sector there at the moment. And it's interesting that Webjet has, he's starting to come up at the moment. We've seen Qantas actually do quite well, but it's a little bit too early for some of these. They could be. This is the weekly, and it's a weekly change. But in the quadrant in the RRG, it's still in the lagging sector in the section. So I do like to look at.
You're saying don't
bottom
falling
pick
knives. Yes.
Don't exactly right, basically.
Yeah. All right. Well, how about we get to the worst performers for the week this week? So let's go back to the watch list there and flick it back to the worst performers. Now, I'll give it here one little click. There you go. You can see that the mouth is working fantastic on the Monday morning. But anyway, again, not surprising, Energy. Energy had an absolutely terrible week last week.
Yes.
Down over 3%. Now, it's interesting because Energy had a period, over the last 4 or 5 weeks, it's found a low, seemingly.
Yeah.
Had a nice little run up over a couple of weeks, fell quite sharply last week. So that's not too...
it's not too promising.
Much promising confidence, but and that's why you're seeing the majority of stocks here down for the week. Energy through there, Pilbara, Paladin.
All the lithium plays as well.
Yeah.
We saw Pilbara before that had a shocking week. Liontown.
Santos is in there too. I mean, that one's really lackluster at the moment.
Yeah.
Can't break out.
It's just been so terrible for the last few years, actually. So, yeah. Deep Yellow. So we've seen some uranium plays starting to taper off at the moment. So the market is really favouring those techie type healthcare as well. Consumer discretionary is doing okay. Financials, done great. But we really need to see these energy and materials. Santa, if you can bring those in your sack, that would be great.
Yeah, look, it'd be nice. I mean, there's no way our market's falling if you start to see, obviously, financials hold up, healthcare start rising, and then we start to get energy and materials rising all in unison. I mean, that just bodes well for the overriding market. But anyway, what's hot in the market this week? Well, on your screen right now is my hot stock tip for the week, which is Charter Hall Long Wale REIT, stock ticker code CLW. Now on your screen are the monthly and weekly charts here. Now, Pedro, the real estate sector is in a very interesting space, particularly with these REITs. On one hand, we spoke off air, they do provide a nice yield from one perspective. But you've got, a scenario with rising rates. The property market is cooling off, whether you want to believe it or not. Out there's a lot of people digging their head in the sand saying it's not happening, but it is. Particularly Melbourne and Sydney, Melbourne more so than the rest. But we are seeing these REITs still perform very, very well. And, Charter Hall, again, this is my hot stock tip. It could have been a number of them, to be honest, really. And this one has shown, from a technical perspective, some things that it hasn't done in the past, in the quiet past for a little while now. And I've marked in the horizontal line at $3.78. To me, that is a very important level. It's close to where the stock listed IPO'd. And you can see how the stock really respected this on the way up. It found support back in 2018, April. Again, during COVID, that was the level that sprungboard the stock up. A very, I guess on a smaller type scale around October 2022, although it didn't touch it, it got thereabouts. And then we had the capitulation through July, September. It held the stock up as resistance in April 24, this particular level, but now we're on the flip side. And if we zoom in, we saw buys really pick it up in November. We're closing near the high of the November bar, following two really nice periods of expansion. I mean, if we look through the downtrend, overriding downtrend on the monthly chart, you'd be hard pressed to find a very clean scenario of one higher low, higher high, and a second higher low. There's a bit of a wishy-washy period through here, but it never took out that previous high. It almost got stuck and slowed down in volatility before struggling through those, through that overriding high in September 2020. This is a very different scenario. We've had strong buying, healthy selling, not taking out that low in particular. The second bout of buying has been stronger than the first bout. And that's so important. Holding above this 378 level, it looks like we might be turning the corner to me in the longer gradient in terms of rate of rise. So I think, even the way this is lining up, huge buying through here. We've only been, sellers have only been able to claw back about half of that, and it hold above the, previous level there that held it in the past. So very interesting right now. If we can get our head above 419, I think we're up for another run up, and we could get to that $4.80, $4.76 in the short to medium term. Thoughts?
Yeah, definitely. Yeah, I mean, I think you covered pretty much everything there. So not much more to add. I would only just add that, if it does, if I can just grab this horizontal line, doesn't want to, I'll just draw a new one. If it does get above, that level there around that $4.30, where we've seen a lot of support and resistance in the past, that's going to be the next level to break. And there's a lot of price agreement around this band here. So $4.30 to that $3.80, then that will definitely be that band to watch out for. And then above that $4.30, where we're reaching the higher levels.
Yeah. So I mean, from your experience, because it's all about structuring the trade, right?
Yeah.
Whether it makes sense. And looking at that chart, if we're looking where price is right now, sitting at around that $4. What's the close of last week? $4.03. I mean, $4.03 up to $4.30. You're probably looking at about 6%. Sorry.
Yeah.
So it's the question of whether this trade makes sense right now, or whether it's worth waiting.
Exactly. And if we just quickly get back onto the charts there, so you mentioned that 7%, say roughly. Then we got that 7% downside. So we're kind of mid risk to reward ratio at the moment.
So maybe a short-term play rather.
Short-term play. If it does get below these levels here, then you'd be staying out of it. But I do like it. It looks quite strong. All
right, fantastic. Well, we're moving on now to a stock that should make you proceed with caution. Harvey Norman stock, ticker code HVN. So on your screen is the monthly chart on the left and the weekly chart on the right. Harvey Norman. Now, I've got this one as a caution, but it is not a bearish caution by any means. This is one of those, what we've been doing on the show with Dale is, although it is a cautious one, to hold off just yet, but it's either in the bullish basket or in the bearish basket. This one is a bullish caution.
Yes.
And the reason I say that, if we just bring up this monthly chart in particular, it is in an uptrend. It's very obvious. It's been in an uptrend since June 2023. And, uptrends when they form, sustainability is always when a trend is forming with strong buying, also met with healthy selling.
Yeah.
That is what, to me, looks is a sustainable uptrend. Now, we are seeing that with Harvey Norman since June 2023. Nice buying, healthy selling, next leg up, healthy selling. What's different about it now is we are accumulating sideways. So that is not a bad thing. it just means that the stock may be going sideways for a little while longer. And it's all about structuring that moment as to when you think is time to get going on that particular stock. And if we just go and have a look, we can pinpoint that exact price point on the chart. And so going back there, we can see that, particularly marking this level through here, I mean, you would argue, because we're stuck sideways through here, we want to see price break to new levels and buyers accept new levels to start getting really excited. So that's why it's a caution for me right now. Get above $5.15, 16. I think once it gets through there, given the way it's, consolidating sideways, it could be a very sharp move.
Yeah.
So you've really got to structure how you're going to do this trade if you are looking to buy above these levels. If you're thinking of waiting, potentially waiting too much after strong consolidation, like through these periods here, you might miss out on the best part of the move.
Exactly.
So you really do need to factor that in. I like the fact that it's really respecting this upwards momentum line. 1, 2, 3 touches now. It just touched it nearly almost thereabouts, closing near the high. So that is why it's a caution for me right now. It is trading up near resistance as well. So, but that being said, it's bullish. I mean, let's go to the weekly chart and have a look. Are you seeing anything else on this one here, Pedro?
Yeah, so I totally understand why this is a bullish caution, because when you look at this previous run up that it had back here, right? So we don't know whether we're at this stage, of the bullish run, or whether we're at this stage of the bullish run. So it does look like it's just, back here in 2012, it came off a very bearish downtrend. So at the moment, we have come off a very bearish downtrend as well. And it does look like we're at the early stage of a possible, longer bearish, bullish, I should say, bullish run. So, it could have upside, and it could actually go up and fill this gap that it did back in 2024.
Yeah, but I mean, let me ask you, is Harvey Norman obviously, the sector that it's in, coming into the Christmas period, potentially, and itself as a business, I mean, you've got JB Hi-Fi flying in terms of the share price. Harvey Norman languishing a little compared to it. Maybe there's value there?
Yeah, well, they're also diversified. So the good thing that I like about Harvey Norman is that they also invest in other companies, and they're also diversified along many investment vehicles. So they're not only a retailer. And coming to the end of the season, December being a bullish month in general, could actually see it lift this stock as well. But yep, caution advised.
Caution. Wait for now. All right, great advice. Now, lastly, what's not hot in the stock market this week? Well, Healius Limited, stock ticker code HLS. So let's get into the charts now. On your screen are both the monthly and weekly. Now, I've only marked one line on this one. And the reason I've done that is to show or highlight that, hey, trying to catch these falling knives. I mean, you're probably sick of us talking about it on the show, but it's so important because, time and time again, trying to pick bottoms comes with danger. The safer move, the more profitable move is waiting for that confirmation. And obviously $1.89 or $1.90 was such an important level in this stock. You can see back in 2002, 2016, and 2020. I mean, when you see touches near almost exact like that and get strong moves, trading can be easy if you know what to look for, right? But conversely, in the most recent example, November 2023, that level did not hold. And what, a lot, could happen, a common thing for those bottom pickers is they're trying to get in at these levels, it's fallen away, they're still trying to pick it up thinking in hope of a reversal. But what can often happen, these levels that held up a stock or significant levels can often be the resistance moving forward.
Yeah, exactly.
And so that's what has eventuated with HLS. You've seen that what was real strong support back in the past now has said, okay, you know what, if buyers weren't willing to accept the strongest level from back during the history, we've broken through, then hey, we're not going to accept it anymore. So
that's right.
We're going to find the new low now. And in order to find a new low, that could take weeks, months, years for that, stock to build up. And you can see, when these lows come through, it could be bouncing off a significant level for quite a while. The next significant level for HLS really is back towards those all-time lows.
Low. Yeah.
So right now, it's one of those high-risk type scenarios for any upward type momentum. I mean, we could also apply one of these momentum lines through here. And, potentially, is it breaking through? You might argue there, but it could be the longer grade and it's still falling within that. So this stock has a lot to go in terms of upside reversal. And it's really combining all the stuff, all the rules, obviously that you guys teach through out the course as an assessor. It's lining up your price analysis, lining up, knowing when the stock is ready to reverse, and just 1 week up or 2 weeks up doesn't make that
exactly.
the case.
Our students wouldn't even be looking at this.
Yeah, maybe shorting, all right? But from your perspective, looking back at this one, what would you like to see for it to give some solace to turn this one from a not hot top stock tip to a hot stock tip? Because eventually, when stocks do trade at these all-time lows, if they do find another leg, if the company turns things around, good fundamentals start to come through, earnings start to increase. If they can turn it around, getting in at all-time lows is a very profitable scenario in the long run.
If you can get it.
But oftentimes companies, they don't do that. They have their initial, peak in life, everyone has a peak, and then, that peak is never often met. In sports, that also happens. Sportsmen have that one peak. With stocks companies, they have that, real strong peak, and then they falter away. They either find value and stick with it, but or they add to value if they can keep moving the company forward. With this one, the way it's falling away, what do you want to see for it to reverse?
Yeah, well, first of all, what I wouldn't want to see is a, very large bar coming out of here, because, that could be shorts covering. You mentioned short selling before, could be shorts covering. So you don't want it to go parabolic, because then only for it to get dumped again. What I'd like to see is some healthy buying around these levels for it. First of all, not to break this low here. So a low of $1. $1 is going to be a very important level. And then I'd like to see something like, you've got your trend arrow here. So we'd like to see something like this, and then maybe finding some support before that level gets broken, and then coming up, breaking that resistance level, coming back down, retesting it again, and then trading back up. So that's just to highlight how much we are needing to see for these types of stocks to have confirmation, So, and that was on the monthly chart. So, these moves can take, it could be years. Yeah, it could be 1 or 2 years until this stock proves itself. So, definitely, you could keep it on your watch list, but, apply a little bit of analysis, but probably not ready yet. Yeah,
fantastic advice. All right, well, thank you for watching this edition of Wealth Within's weekly hot stock tips. Remember to tune in to the live Australian stock market show on YouTube from 7 p.m. Eastern Time every Tuesday night. To find us, just type Wealth Within live in the YouTube search. Remember to have your phone ready to call in live to speak to us so we can answer your questions. The number is 03 9290 9988, or you can email into the show right now by sending your questions to info@wealthwithin.com.au. Now, if you want a copy of Dale's first book, you can still get it for free. You just have to pay the shipping. You can order it from our homepage, wealthwithin.com.au. Now, I hope you've enjoyed today's episode, and thank you very much, Pedro, for your excellent comments today, mate.
It's been my absolute pleasure, Phil. Thanks for having me on.
Yes, and we'll have you back again next week whilst Dale is away, so I look forward to getting into some good stuff with Pedro and seeing his expert analysis on the stock market. But anyway, thanks again, Pedro, and thank you all for watching. For now, goodbye, good luck, and good trading.